Hello, Sky Traders. Welcome back to a new video of our weekly recap. This is Bina, your trading coach, and today we are analyzing the S&P 500. In the weekly recaps, we do a top-down analysis. We analyze the chart fundamentally and technically. We focus on the important concepts that we give in details also in our academy. So don't forget to check them out. So without further ado, let's get started. On the weekly time frame, the S&P 500, this is the range, right? And again, when we mentioned that this is the trading range, it's not supposed that we need to complete and fulfill the whole range. It means that we focus on the next liquidity hunts. What's the liquidity hunts? This one, this one, this one, all of these higher lows. All of the higher lows that were formed over the past weeks, and all of these liquidity hunts are the next targets or possible targets. We target this one, we target this one, this one, this one. Now, if we're gonna do another lower low, so this is gonna be our next target, right? So on the lower scale, this is the next trading range, right? If we are continuing in the downtrend. So it's really important to focus what's our next target. Now we pointed that this is a possible next target that we can reach on the weekly time frame. Right? That's great. And also we on the weekly time frame we are creating a lower highs with a lower lows. That's a good sign that we're in a downtrend for sure. And we are always trapping traders. Give a look at these candles. It's always a trap. And when we see these kind of signals in the market, we know that the market is in heavy downtrend. That's why it's trapping traders. That's why it's trying to deceive and manipulate the traders out there in the market. That, hey, we end up the downtrend or we're starting a new trend, but this is not the case, right? So let's remove the drawings and move to the daily time frame. That's cool. On the daily time frame, if we're gonna focus on the another trading range, this is gonna be the range, right? And why it's important? Because this is an order block, right? Why? High pressure buy candle, trapped market structure. This daily candle broke this market structure with a high pressure sell candle. This is considered, you can call it a double top, you can call it an order block, you can call it like a strong resistance. Again, I don't care about the naming, but by the way, we also discussed this in our academy course, and we mentioned two important things: that once the chart creates a high and a higher high with a high pressure buy candle, creating a market structure, in case now I'm discussing in case of a sell trend or a downtrend, and then another high pressure sell candle breaking this market structure, trying to trade back and then going down, we can actually fulfill this trading range. And once we reach the bottom of the trading range, we can expect another low with a lower low or low with a higher low, and again creating a high pressure sell candle, trapping traders, breaking this market structure with a high pressure buy candle, and then fulfilling the trading range, right? So this also considered a sign of reversal, could be. For the price delivery conditions, we are expanding, retracing, expanding, consolidation, expanding, reversal, and now it's a really important phase. Why? Because this is a phase of either consolidation or retracement, right? And this is the most phase where a lot of manipulation happens. Why? Because in the consolidation or during the consolidation phase, market is trying to build orders in both directions, and this is when all of the manipulation happens. Because some of the traders thinks, yeah, we fulfilled, or now we're going in an uptrend, or it's a fake double top, or it's a fake resistance, blah 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 blah. And other traders, yes, we're continuing the downtrend. So a lot of manipulation happens, right? But again, if we focus on this trading range, this is going to be our next liquidity hunt. This is going to be our next liquidity hunt. This is going to be our last liquidity hunt within this trading range, right? In case it's it's downtrend, in case it's an uptrend, this is going to be the next level to take all of the liquidity setting up there, right? And probably once if we're going to reach this area, it's going to be a high pressure buy candle taking out all of this liquidity, followed by a high pressure sell candle manipulating the market. Then we can go further downside, right? Also, let's for those who like to combine this with the indicators, for example, if you'd like to combine this with the MACD indicator or the moving average conversions diversions, and we also discussed this in our trading course in the academy, how you can combine technical indicators in your trading strategy, not to take decisions, because I'm not a big fan of indicators and chart patterns. I focus on the price action, I focus on the behavior. But for those who like to use indicator, you can use indicators in your favor to understand how other traders are seeing the market. And also you can have some signs of confirmation on your bias or against your bias, right? So you can also see here that the moving average or the fast moving average is crossing the slow moving average at exactly this point. And this is a strong point. We mentioned this before. And now we're seeing an expansion or a divergence between the fast moving average and the slow moving average. So this could define a sign of a possible further expansion. This is aligned with what we mentioned, that now we're in a phase of consolidation. So we're waiting for another expansion in either of the direction. Why? Because it's also another support. You can call it support level or local support. You can call it liquidity void, possible liquidity void area. If you want to also combine this with other indicators like stochastic indicator, and bear in mind that the moving average conversion and diversion, it uses moving average, while stochastic uses the momentum, and it's the same concept. We have like a fast line which represents the lower periods or lower length, and the slower line which represents the higher period or higher length. And as you can see, now we are below the 20%, which means from a retail point of view that's oversold. But again, I don't care about this. It's not my main thing that I care about. Stochastic is more powerful when it's not overbought or oversold. I don't care about all of these stuff. It can give me a confirmation, or it can give me more strong bias when it crosses the 50%, that we are expanding more and more and more in the same direction. But a lot of manipulation also happens in if it's like above or below the 80%. For example, if you give a care about this point, you say that, oh, we are overbought, so it's time to sell. But actually the market goes up. A lot of manipulation happen all over this period. People are thinking that it's a overbought scenario and they start selling, but it's not the case. We're in an uptrend, so we have to combine this. For example, now it's a downtrend, right? Or at least for now. So our bias is more of how to find opportunity in the downtrend. If we cross this 50% Fibonacci retracement level consolidated without going further downside or without doing a further move, it could be a sign for uptrend, yes, to take this liquidity, at least for a short period. But if we reach the 50% Fibonacci retracement level, created another high pressure sell candle, right? And breaking this market structure one more time. Now we have two confirmations. We created another lower low. We created another lower high. We retraced back to the 50% Fibonacci level and then broke the market structure. Probably it's going to be a falling down of the stochastic indicator below the 50%. So it can gives us more bias that we're in a strong expansion. It's going to be aligned with the price delivery conditions, expansion, consolidation, retracement, or reversal. So that's what we're waiting for. Because now, if you give a care only about the stochastic, all right, it's oversold, so I'm going to buy. It's not the case. Probably it's the case for a short period to reach the Fibonacci retracement level, or like because we are consolidating already. But this is not the case if you're focusing on the long term. So let's remove the drawings, let's remove the indicators, and let's move to the 4 hours time frame. All right, as you can see, we have now 3 trading ranges to focus on. This is a lower high, this is a lower high, a lower high, a lower high. What does it mean? This is the next liquidity hunt, liquidity hunt, liquidity hunt, liquidity hunt. Right? We fulfilled this one. We fulfilled this one. We're still not fulfilling this one because we didn't take out the liquidity out there. But this is a gap right in the market, which means that price dropped significantly within a short period of time without fulfilling these prices. And that's what we took. Same case in here. This is a gap. And also this gap is aligned with the 50% Fibonacci. So if we broke this level right now, this is the really important level because it's trading back to the market structure, as well as 50% Fibonacci retracement level, as well as the consolidation phase could be completed now. And then we can have a further move to the downside, breaking this market structure and trapping these traders. Because when I see these kind of sell candles and are not followed by a high pressure buy candle, we still didn't see a high pressure buy candle. It's more likely that they're gonna be trapped twice, right? So, and this is gonna be the next phase. Otherwise, if we broke this with a high pressure buy candle, consolidating near the 50% Fibonacci retracement level, and then another expansion, this is gonna be our next target. And then this is gonna be our next target. And then this is gonna be our next target. And once we reach there, it's a possible opportunity for the double top, or it's a possible opportunity for an order block. Then we can move further downside and break this market structure. Why I'm all biased to the downside? Because again, the bear market is not over yet. So even if we have like a short term uptrend, this is not the end yet. On the 1 hour time frame, if you're a intraday trader, or again, if you're a day trader, this could be a good opportunity to understand what's going on. So now on the short term, we created a lower high, and a lower high, lower low, and a lower low. Some retail traders think that, oh, this is a wedge trading pattern, and then we can experience further move to the upside. Could be, but this is not only the case to trade on the hourly chart or like whatever. Why? If we draw the 50% Fibonacci retracement level between this level and the final one, this is the 50%, right? So even if price is trying to reach this 50%, we can expect a further move to the downside, right? Price is now consolidating in this area. Let's remove this to be more clean. All right. Price created this high pressure sell candle, and it's aligned with this possible liquidity void area. Price created another high pressure buy candle breaking this sell candle, consolidated a little bit. And now if we created a high pressure buy candle today or tomorrow breaking this market structure, we can expect further move to the upside. But this is a really important level. So bear in mind, if you want to participate in any kind of buy trades, this could be a possible level of taking profit, and this could be a possible level of further move to the downside, right? So now it's going to be completed the consolidation phase. This is going to be our next liquidity hunt. Could face another retracement and then further move to downside, or another consolidation and then further move to the downside until we complete the trading range or reach the trading range. On the 15 minutes chart, if you're looking for some kind of intraday trades, this is an important level. So probably we need to take out all of the liquidity in here. And this is also probably going to happen like within the next 1 hour or 2 hours to take out all of this liquidity from this area. And probably it's going to happen like around 10 or 11 a.m. CET during London session. And we can expect further move to the downside during New York session. On the 5 minutes chart, we're going now. Yeah, again, the same concept applies. This is a really important area because, again, a lot of liquidity is set in here. So if price is trying to reach out this area, probably we're going to go down again. If we are considering the 50% Fibonacci retracement level on the local one, we already broke through the 50% and now we are consolidating. So probably we can expect further move to the upside. Why? Because this is our next liquidity. So if you're looking for some quick trade during the day, and this is going to be the new trading range, and we can expect further move to the downside during the day or after we complete again and fulfill this level. So this is our view for the S&P 500. Again, we're not giving any trading advice in here. We are giving knowledge. We are giving you the material on how you can understand and view the market, how we can use different indicators. And I don't mean by indicators here like the technical indicators. I mean things that you can see in the market that gives you confidence and confirm on your bias or deny your bias in the market. So again, chart doesn't see your patterns, your drawings, your indicators. It basically behaves based on the price action concept. So whenever you use any kind of indicator, be cautious to use it in your favor, not get trapped, not get deceived, and trade safe. So thank you so much for watching. See you in next videos.